In this week's episode of the Stock Scores Market Minutes, I will talk about when to buy weak stocks, do that bargain hunting. I'll then do my regular weekly market analysis. We'll do some market scanning in search of opportunity and look at the trade of the week on DPLO. All right, let's talk about when to buy weak stocks. When can you bargain hunt? High-profile stocks will often suffer setbacks, leading them into downward trends. These are good companies that just suffer from a little bit of negative market sentiment. Now, once a downward trend line is well established, simply wait for that downward trend to be broken. Be patient. The downward trend and the break of it must be very obvious. And so you want to really wait for a clear, well-defined downward trend and then a very obvious break of that downward trend. And I'll show you a couple of examples in just a moment. You're not going to be right all of the time. So when you enter these trades, it's important to set a loss limit, some sort of stop loss, at a price just below the low of that downward trend, of the pullback. So let's take a look at the chart of Facebook because it's a great example of what we're looking for. It's done it twice. You can see here, pretty negative downward trend. You can see it's been hitting the trend line a number of times, and then it made a very obvious break of that downward trend there, right around $140 a share, and it went into a nice upward trend. More recently, it went into maybe a 6-week downward trend, and then has made an obvious break of the downward trend, which should take it back to those all-time highs. It will have to get through this resistance level first. Now, another stock that I think you should watch right now is Tesla. This is a stock that is obviously a very well-known name. Lots of people like it, but it has been in a downward trend for a number of months, and it keeps hitting that trend line. In fact, very recently it hit it. However, if it were to break up and break through that downward trend line and do so from this rising bottom, it would be a good turnaround story and likely to work its way back to those old highs. Now, it's important to wait for the downward trend break. Don't anticipate it, but this is one to keep an eye on for that signal. All right, let's get into the analysis that I always do, the U.S. markets to begin. This is the short-term chart of the S&P 500. You can see we had an upward move, went sideways for a little bit, and then this past week we broke it and we've moved higher, and we actually hit all-time highs for the market on Thursday before a little bit of a pullback on Friday. Now, that's quite a common thing to have happen. When you get a market that rallies into resistance, it will typically get stuck there. So you can see we actually were through it during the week, but we've ended up closing below it. And that makes me think that the market will probably pull back a little bit next week and just kind of go sideways under those all-time highs. Perhaps it goes sideways for a week or two and then can finally break out, or we get rejected at this resistance level and roll over. But what's encouraging is that on this bounce back, it did not make a falling top. It has made new highs, and that's a positive signal for stocks in general, and therefore I remain bullish of the market overall. Looking at the Russell 2000, which is the small cap sector, these stocks are not keeping up with the large caps that make up the S&P 500. You can see that they are still stuck under these highs and still far off the longer term highs. And so really the small cap stocks not yet participating in this rally. Onto the Canadian markets, take a look at the TSX. It had a pretty good week as well, but a little bit of weakness at the end of the week. I think we may pull back to that upward trend line before we bounce. Got some resistance here, some here. So it's dealing with that overhead resistance given that it was much higher. And a lot of that weakness in here came from weakness in oil. Now oil stabilizing a little bit, so perhaps this market can start to test those all-time highs like the US markets. Looking at that longer term chart, you can see it has that resistance level up in here. We are below it still. I expect we'll get up to it, get stuck, go sideways for a while. But what's important is that the market made that rising bottom, and therefore we still have the potential for that long-term upward trend to continue. TSX Venture, which of course is those microcap stocks in Canada, and it has made a little rising bottom, or pardon me, a break of this little short-term downward trend line, but it still has lots of work to do because it's still below this longer-term downward trend line, and it will need to rise up to it, probably get stuck at it and then break up. So it's not as bad as it looked last week, but it's still not a great looking market, and I would suggest a fair amount of caution with the TSX venture. On to currencies, starting us off with the US dollar UUP, which has been the dominant currency for some time, but it's starting to show a little bit of weakness. We broke that upward trend line, and now we had another round of weakness this past week. Not terrible, but that long-term break of the upward trend line is a bit of a concern. Now, the reason I say not terrible is because it's breaking from a new high, or a local high anyway. If this had been a falling top, then I'd be more concerned, but I think we may just be seeing the start of some sideways trading action in the US dollar, but it could definitely be the start of a reversal of that strength. Now, what that does, however, is it probably paints what I think is the most important chart of the week. I've been bearish of the Canadian dollar for a very long time, but it's now broken that downward trend line just slightly. I wouldn't say it's a real strong break, but it did make a rising bottom, and that is a sign that maybe money finally coming back to the Canadian market than the Canadian dollar. And so I think that's something that's significant. It is probably driven by the potential for the new NAFTA replacement to get ratified, and perhaps some other things with the Trans Mountain pipeline getting approved. Maybe some money is coming back to Canada after really avoiding the market for some time. On to interest rates, and they continue to fall as this chart continues to go up. This is the bond market. Bond market goes up. It's an inverse relationship with interest rates. We did hit new local highs this week, but failed to close at those levels and still remain in this short-term 4-week trading range. But it's still a healthy chart, and I remain bullish of bonds, which means interest rates are likely to continue to be low and perhaps even get lower. Commodities, well, the biggest move of the week was in the gold stocks, and of course I switched my rating to bullish back here when we broke that downward trend line. I thought we would get stuck here for a little while. We did, a little bit of sideways action, but then broke out this week as central banks continue to have a very accommodative monetary policy, perhaps worried about the potential for a global slowdown, and that accommodative monetary policy is good for gold, and you can see that in the chart. Oil has really not looked all that great. It was pretty oversold here, and it's bounced back, but it has not broken that downward trend line. This strength was driven mostly by political tensions with Iran and the US, and those things don't tend to lead into long-term upward trends. There tend to be little blips, and so I wouldn't pay a lot of attention to that yet until this chart really starts to improve and build rising bottoms, break through some of these resistance level. I would remain fairly cautious with oil. Finally, the fear chart. Of course, fear has been low for a while and continues to be low. Market not really too concerned about a correction, which makes sense given that the market is testing its all-time highs. So US stocks neutral long term. We are at resistance. I expect to get stuck there for a little while, but the short-term trend is up, so I am bullish short-term. Canadian stocks neutral on both time frames. Gold, I am now bullish on both time frames. The long-term 3-year, 5-year weekly charts has gold breaking out from a fair bit of volatility, so I wouldn't be surprised if we see a pullback before it goes higher. And on oil, neutral on both time frames. Stocks broke out to new all-time highs, but the buyers showed a little bit of hesitation after that breakout, indicating we will likely see a short-term pullback before the markets then try to go higher. Gold has broken through the long-term resistance and should go up in the months ahead. Oil trying to stabilize, but it's still a questionable chart, so I would remain cautious there, and fear is low. All right, let's do my stocks to watch section, and for this, I like to use the Stock Scores Market Scan. We're going to run the Canadian Stock Scores Simple Weekly Scan this time, and this will search through the entire Canadian market in search of long-term weekly charts. The reason I chose Canada this week is because there is quite a few gold stocks on the Canadian market, and I do think gold is an interesting place. This first chart that I like is not a gold stock, but what I like here is that it is flirting with the break of this downward trend line. You can see right in here the little bit of strength here. It's not quite through resistance at $1.40. It's trying to break the downward trend line. I'd give that a 6 out of 10. I don't think it's great, but it's got some potential. Continuing along, again, I'm paying attention to the patterns here, looking for abnormal breaks from good chart patterns. What is a good chart pattern? One where there is compressing price volatility and then a break from it. So here you can see the bottoms rising towards a flat top at 250 and then a breakout through that. The only negative here is we're still below this longer term downward trend line, which has resistance at about $4. So I'd give this a 6.5 out of 10. I like it. I just think the upside may be a little bit limited, but hey, let's face it, from where we are now to $4, that's still a 35% return, certainly not bad. Moving along, and of course that is a silver stock in the sector of the market, those precious metals that have been doing well. Continuing along here, Ivanhoe Mines, nice break, but going to find a lot of resistance in there, so the risk-reward trade-off is not great. This one up too much already. We'll do a couple more. Here's SMF, one of the stocks I featured for you a few weeks ago, and it continues to move higher on the strength in gold. I think we'll stop after this page is done. Kinross, T.K, breaking the downward trend line. Good volume. Look at that volume there. Good price action. It'll find a little bit of resistance at 6 and then some more at 7. I'd give it a 6 out of 10. So this is the nice thing to do with this tool, is it allows you to search through a lot of stocks in a relatively short amount of time, looking at the charts, and it's open to any of my investor or active trader students on stockscores.com, and you can go to the StockScores website and learn more about membership there. All right, let's jump back to our presentation here, and we're going to look at the trade of the week, which is a day trade, happened on Friday. Friday was a pretty quiet day, but in the afternoon, after some weakness in the morning, the market stabilized nicely. And this particular stock made a action candle break right here just before 2 o'clock. And at that point, the position size for $100 of risk was 3,330 shares, which is a fairly sizable trade, $17,150 in capital. But of course, because it's a more expensive stock, you can leverage it 3-to-1 when day trading, which meant that the actual capital required to do this trade was $5,720. It ended up doing really well, closing the day at a plus 10 RR. So that's a $1,000 gain on $5,700 of capital, which represents a 17.4% return for this one-day hold. You had to be patient to find it. Sometimes it's easy to quit trading early on a Friday afternoon, but there was a number of good trades into the close on Friday, and this was one of them with that 10 RR trade. Well, that has been the Stock Scores Market Minutes for June 23rd, 2019. Hope that you've enjoyed it. If so, please click on the like button, leave me a comment, subscribe to the channel, and most importantly, trade well.